Trading Market Technicals morning call video for Tuesday, June the 4th. Markets did have a green day. Dow up 138, Nasdaq up 9.5, S&P up 9.5, and Russell 2000 up 6. That was before we had economic data that came out around 10 o'clock. Prior to that, we had markets that were choppy, very, very choppy price action. Very hard to establish some sort of a trend for the day. But once the numbers came out, the markets didn't like it at first, rolled back over, and then found its footing and started to grind higher pretty much most of the day. Really, really choppy price action. And on top of that, markets were very slow going into start of the new year. But markets were higher. We were oversold. I mentioned on the NYMO, the McClellan Oscillator, which I'll just show you briefly again today. Say, look, I'd be looking for some sort of a dead cat bounce. Plus, you had first day of the month, so you have mutual fund inflows come in the first day of the month as well. That also helped boost stocks too. Now, what do I have in front of me? So I started looking on the internet, and this is compliments to CNN. And CNN posted how we have some substantial gains on Tuesdays. And I did mention that for the last couple of weeks. Now, I haven't really heard too much about it. So now I'm hearing it a lot via the internet, doing some research on some financial blogs. So now I'm getting to hear this more. So what happens? When you see it and hear it and everybody knows about it, it usually doesn't happen anymore. So I'm not saying it's not going to happen this Tuesday, but I just wanted to let you know, be alert, be aware that we had 21 consecutive gains on the Tuesday. Okay, that is a lot. That accounts for 1,518 Dow points. So that's pretty crazy stuff, I tell you. But this is no lie, and this is exactly what we're looking at here. I want to show you this little chart, if you will, this bar chart, to show you what it is. Now, it'll be interesting to see what happens today on Tuesday. Now, we did get that dead cat bounce, and it really was a dead cat bounce. It was very quiet. Volume was light. So I think the markets are having a little bit of tough time. And usually when we have a little bit of a dip, these big buyers of dips come in and really rip the face off of the shorts. I don't think that might happen again. I think it might be a little different. We do have other asset classes that are not showing the signs of that, which would be obviously the Japanese yen, the Nikkei, which we've always talked about as well. And we also have our momentum oscillators have gone into sell signals. So and we have this volatility at the market tops, all pointing to lower prices. Now, that doesn't mean that we're not going to go higher first, and we've almost retraced 50% of that candle on Friday. So even if we do pop up today, I think if we get another weak bounce today, and today is likely that we should, right, if history repeats itself, I think it's going to be a great opportunity to throw on some shorts. Now, again, we don't want to just go run into a freight train, so we need to see the market bounce and fail. And if the market does bounce today and then maybe opens up tomorrow, which would be Wednesday, and then fail and start to roll over, then that would be really a trigger to get short the market, okay? So there's a little time constraint involved in that as well. So those of you who are looking to swing the market short, or at least to position yourself, I think that would be the ideal to do. You want to always wait for confirmation. You never want to get in front of a trade train. As you know, the market is up, the longer-term picture is up, and the short-term trend is still up. So just keep that in mind. So that's what I'll be looking for today. I'm going to be watching and monitoring how the markets are behaving today as far as price action is concerned. Doesn't mean nothing about day trading, right? We're day traders, so if you're day trading equities, you want to look for the best trading opportunity right now in this iffy type of a market, because it looks like the trend is changing, but it does take time, right? Tops take longer than bottoms forming, so let's just keep that in mind as well, okay? So let's go right into the charts here. Before we do that, let me just show you a couple of things. I'm not going to get into all of our indicators like I did on Monday, but I do want to show you the NYMO. And we did break lower here on Friday. We closed outside the band, and we have ticked ever so slightly higher, up to 116. So that really isn't any. As you can see, this is a very weak bounce here. Now again, we're still in oversold territory. So if we would have came back up into the 50-60, I would have liked that a lot more to get short. So we are still in oversold territory, like for another bounce. So maybe today, Tuesday, the market does bounce. It maybe bounces even harder than yesterday. That doesn't mean that it's a full-blown buy the dip here. where a lot of people have been very successful during the course of the year. But let's just keep this in mind, and let's just say that, we'd like to see this come into the 50-60 range, right into this trend line here that I drew. Okay, now let's take a look at the Nikkei. I mentioned Nikkei just continues to get battered here, and as you can see, once volatility, if you look at all these small candles, that's what you want to look at in the chart, right? When you look at the small candles, no volatility. Market just keeps chugging along. Boom, we got one big volatility coming, usually follows suit. And sure enough, we had a big spike up, we had the reversal, and then we have these larger candles coming, and now the markets continue to sell off. Yen appreciating, yen running higher, as you know. So you can look at the yen as well for a little market guidance as well. I like to look at the tick as well as the VIX and the vol spread, which is the volume spread between up-down volumes. So it's interesting to see what happens. And that actually really didn't do much yesterday. So it's rather quiet, but again, a lot of stuff that we need to digest and need to watch during the course of the trading day. All right, Euro had a good day yesterday. We had risk on, so Euro came up. Again, showing you this big headline, head and shoulders pattern. But again, only bearish when we break below the neckline here. So this pattern is would not trigger until we break that neckline. Let me show you the dollar real quick. Dollar took a little bit of a bath, put a bit into equities and put a bit into commodities. So therefore, remember I had mentioned, let's just keep an eye on the relationship between equities, risk on and risk off, and we still have that inversely correlated relationship. So markets are moving higher, dollar goes down. So that for now we will get that. Now you'll get days that the market moves higher and the dollar moves higher, but you need to see a good month of positive movement with equities to say, hey, maybe this relationship has changed. Take a look at copper. Copper had a good day, obviously, where the market's up, but we're kind of consolidating here, as you can see in this big pennant. So if the market breaks out, right, if the copper breaks out and the market starts to break out, then that's really good for equities itself. So again, something to keep an eye on, something to think about when you're putting on and maybe you're doing an option position or even equities for that matter. But I don't like the fact that we've had this tremendous downward movement. Equities really ignored it until we got down to here and then really had this big move pop up. So kind of saved itself. But interesting here. And I'm still watching. I watch copper every day. Take a look at the junk bond index, JNK. Money coming out of JNK. That means it's risk off. So it's a good gauge of risk like I look at the Russell. JNK, just want to show this to you. I haven't showed this to you in a while. Look at this. No volatility. Since the beginning of, actually since November. No volatility at all. We had that bullish fallen wedge I showed you back in February, and then we kind of rolled all the way up here, and then we started market starting to break down a little bit. So risk off, you could see this clearly in the JNK. Take a look at the tick, and we're still hovering above zero, and this is the end of day tick. Now the tick, the intraday tick, really didn't do much at all yesterday as well. So when I look at the internals, I look at the vol spread, which is the up-down volume, I look at the tick, and I look at what the VIX is doing, and I'll show you the VIX here. Really, the internals didn't show me much of excitement saying, wow, this is definitely buyers coming in, buying dips. Now, we did have some inflows of mutual funds, sure, but I really wasn't too excited, so that's why I kind of labeled this as a dead cat bounce. VIX here, just want to show you, we did have a big pop-up early on in the morning. As I mentioned, we had volatility come in, and then volatility died and dropped, and then we have this large doji. Inverted hammer, if you will. Now we're below. We did break down below. So now, if we want to get a buy signal in equities, right, we need to break down today, and then follow through tomorrow, and that would give us a break below today's low. If we were to, just again as an example, if we were to break lower, then I think the markets would at least have one more pop up and then fail. Maybe test the highs. I don't think it would even get that far. But speaking of that, let's go right into the charts, take a look at. And as you can see here, we did recoup about half of that candle. Let's see what happens today if we get back up to this to the upper end of this range here. Now, if we fail to the 20-day moving average, and then I would look for tomorrow maybe to have try to have a pop up and then fail again. So we'll see. Tomorrow is going to be a really big day. Today and tomorrow, really, to see how the markets react to yesterday's follow-through. Now, look at all of our indicators here. As you can see, momentum, our commodity channel index here, CCI, rolling right over. And I can show you all of the charts here. They're all rolling over. But it's also a good thing, too, right? Where there's a negative, there's a positive. They're unwinding their overbought readings. So if the market doesn't go anywhere and maybe just hangs around here, on the spiders. This is going to be a good sign to when the markets do come into the zero line or down at the 20 area in the stochastics, where you would eventually would be buying the market. So I'd like to see the market really come down to here before I look to buy the market. And there will be opportunity. You just have to be patient. But as you can see here, this pennant formation, symmetrical triangle, we did break down, and we just back tested this thing here. So really not much of anything on the spiders. We did pop up again, putting this candle. Yesterday's low is really going to be really the key. So look out for yesterday's low in the coming days to see if we break lower. If we do break lower, then I definitely think that all bets are off, and we're going to come right into this horizontal resistance, where you're going to have this confluence area of support, which would be the 160 area in the spiders. So look for that in the coming weeks and coming days. Spiders 30-minute, we did break down lower, as you can see, and then we popped up. So again, just below 162 area, that's going to be the target area on spiders on a 30-minute. Diamonds, again, see, as you can see here, we're still in this uptrend. There's no real technical damage, but the longer we stay below the 20-day, the longer it's going to fail to resume its uptrend. So if we look at the 20, we're still here. So if we do break up here Tuesday, Wednesday again is going to be an important factor. We're going to need follow-through to break up higher. Okay, now even if we do break higher, and I think we try to test these highs, and if it does fail, that's going to be even a better short, because you know your stops are going to be at these highs. Okay, take a look at the transportation index. Now, remember, we have a head and shoulders pattern. We have not triggered. We triggered yesterday, but it didn't close below that. So that means that the head and shoulders pattern is still valid, but has not triggered. Okay, remember, has not triggered. We need this to close below on a closing basis, and then I'd like to see a bear flag into this neckline of 112.35 and fail in order to get short. Now, if that happens, I think that'll put a sell signal in equities as well, because our leader would break down, and again, Russell would do probably the same. As you can see, Russell did break down from the bear flag here, that little bear flag we have here, and caught that lower trend line support right to the penny, and then bounced. So again, this is what I want to see. If transports break down, more than likely Russell will break down. Risk assets will break down as well. Okay, take a look at Goldman Sachs. Goldman's just been a beast. I mean, literally a beast. This was a great little call we had here on this bull flag, and this is exactly what you want to see. You have bearish symmetry all the way down, right? Bear flag, bear flag, bear flag, bear flag. Boom! All of a sudden, it breaks. Price breaks back out above this downtrend line. Bullish symmetry starts. We have a bull flag, which will be a back test of this area here, and then off to the races. And that is what you want to see, guys. That is what you want to look for when you're doing your homework at night. This is exactly what you want to look for, because this would have paid you handsomely if you were trading banks and stuff like that. Again, it doesn't have to be that sector, you know. And also, I'm a big fan of stay comfortable of the stocks and sectors that you like to trade. When you kind of like veer off to different sectors, it gets a little harder, because you're not really following the price action. So if you're looking to trade banks, watch them first before you really get in, or trade really small before you look to get in. And even so, what if it takes you a couple of days? Believe me, you'll be trading better in that sector than just jumping in. Okay, take a look at our XLF, and I just want to show you, see here, we're down, still below this lower trend line, and still below the 20-day move, above the 20-day moving average, excuse me. Again, because yields continue to rise, it's going to be good for banks. And Apple, tell you Apple, I'm very impressed. I like the way Apple is holding its level here. So I'm thinking Apple breaks if we get to 470 and fail, then it's going to really be a test to see what happens here with Apple, if we break lower or if we break higher in Apple. So right now, Apple's a trading stock. I would not be short Apple here. I'd rather be a long buyer here in this area above 452, I'd say. Actually, 457, take out Friday's highs, would definitely get us, I wouldn't say definitely, but definitely, I would definitely feel like it would be a good shot to the 470, and then we would need to reevaluate it. But anytime you see price action just kind of really sideways, you know, we have been drifting higher ever so slightly, but really consolidating here, building up energy here. And as you can see, look at the MACD, just literally flatline, and then stochastics not quite overbought yet. So this definitely has energy to go to 470, and then we would reevaluate it and then see where it goes from there. A break of 470 would get us back up at least to this 500, 505, and then we would reevaluate it as well. But right now, again, just a day trading stock. But if it breaks 470, that would entice me to really start getting along the, Apple. But I do feel still Apple will probably at least try to break down one more time. Not saying it's going to get down here, but maybe makes a higher low here, and that's going to be really your buy signal on Apple. Okay. And lastly is the Qs. As you can see, Qs here did break below and then actually rallied to get above the 20-day moving average. So tech is actually working out better than the other 5 indices, the other 4 indices that we follow. So tech holding in there, doing pretty well. We'll just need to see what happens. But remember, guys, we have a lot of economic data coming out. We do have non-farm payrolls that come out on Monday. And I think that's going to be more important than the last several non-farm payrolls this year. Okay? Because, again, Ben Bernanke is stating that he's going to pull the reins on his asset purchase program in June. So we have non-farm payrolls come out, and this is going to be the key that he's going to be watching is non-farm payrolls. And also manufacturing. Now, manufacturing was a little weaker than expected, so that's not a good sign. And we're also coming into some seasonal weakness here in June. Markets do pick up in July, but just want to let you know that we do have some seasonal weakness. Now, we also had that in May, which did not materialize. So just keep that in mind, just an overall perspective of what's going on and what is to come potentially in the markets. Have a great day. We'll talk to you tomorrow. Take care.